Welcome to Satya Skills. In this video, let us learn the features of life insurance. The following are the important features of life insurance contract. It is a general contract. Life insurance is a contract between insured and the insurance company. Therefore, it should contain all the features of a valid contract according to Indian Contracts Act, which are in the following way. A valid contract should have a definite offer by one person and acceptance of the same by the other person to whom it is made. Offer in case of life insurance is the proposal from the insured, and then in the form of a application, and acceptance of that particular application by the company is the acceptance. The risk will commence after the issue of acceptance letter by the insurance company. Parties to the contract should be competent. The insurer should be major with sound mind. The insurance company should get license to undertake the insurance business. Both the parties should have free consent. In life insurance, both parties must know the exact nature of risk that is insured and both agree upon the same in the same sense. Both the parties should have consideration. In life insurance, premium is consideration to the company and the risk cover is consideration to the insured. The object of contract should be legal. In case of life insurance, it is to protect the life against risk of loss at the event of death. Second feature, insurable interest. In life insurance, the insured should have insurable interest in the life to be insured. In the absence of insurable interest, it is invalid. Remember that invalid cannot be enforced. The insurable interest must exist at the time of contract of insurance. Insurable interest is the essential one and it only deals with monetary benefits. Insurable interest can be in two ways: insurable interest in one's life, insurable interest in others' life. Insurable interest may arise due to business relation or family relations. Then persons who have insurable interest. An individual always has an insurable interest in his own life up to any amount. This is unlimited because loss cannot be measured in terms of money. Husband is presumed to have insurable interest in his wife's life and vice versa. This was stressed in Griffiths versus Fleming case, very popular case this is. Then a person has insurable interest in the life of relatives whose lives depend on him. Any person deemed to have insurable interest in the lives of those who are dependent upon him. General rules of insurable interest in life insurance. Insurable interest must exist at the time of proposal, but need not be an essential factor at the time of claim. Services without dependence will not constitute insurable interest. Services of wife are exception. Example, son has insurable interest in the life of his father on whom he depends, but father does not have insurable interest in the life of son who may be serving him, but on whom he is not depending. Insurable interest should be legal. It should not be against public policy. Insurable interest can be to the extent of legal responsibility. Insurable interest should be definite. It should be able to form legal relation between two parties. Then third feature is utmost good faith. Life insurance requires utmost good faith by both insurer and insured. They must be of same mind at the time of the contract and disclose the facts completely. They should provide material facts such as age, income, occupation, health condition, habits, family details, address, etc. exactly without any assumptions. Even the insurer is equally responsible to disclose material facts about the insurance and other details applicable to insured. All the facts should be disclosed in full and it should be a truth. Both the parties are equally responsible that the essential facts should not be concealed. The following facts need not be disclosed, like circumstances which reduce intensity of risk, facts of the public knowledge, acts known to the insurer in his ordinary course of business, etc. Then Fourth feature is warranties. Those representations which are embodied in the policy forms the part of the contract are called warranties. The information given by the insured to the insurer during the formation of the contract is representation. Representations may be material or non-material. Warranties are an integral part of contract. If the warranties are untrue, contract becomes void. If there is a breach of warranty, the insurer is not bound to perform his duties, that is, he need not pay the claims. Then suicide. Life policy usually contains a clause that no payment shall be made if the insured commits suicide. In India, suicide itself is not a crime. A policy in India cannot be avoided on the ground of suicide unless there is specific clause to that effect in the policy. All life policies issued by Life Insurance Corporation contains suicide clause. According to this clause, if the assured commits suicide within 1 year of the commencement of risk under the policy, will not be allowed to claim the insurance amount. Accident benefit. When an insured under the accident policy is killed or suffers an injury, the amount is paid in double. The cause of death in this policy is not primary to pay the claim. Life insurance contract is conditional. Life insurance contract is conditional because the insurer shall pay when the condition is fulfilled. The insurer pays the sum only on the death of the insured or the conditions mentioned in the policy. And the last feature is that it is not a contract of indemnity. This I repeatedly said that life insurance is not a contract of indemnity. Life insurance contract is not because the value of loss of death cannot be ascertained. It is not possible to ascertain the period of survival of the insured. Therefore, in life insurance, the fixed sum is paid. That's all in this video. All the best.